Question number 1. In its April year 1 production, Hun Corporation, which does not use a standard cost system, incurred total production cost of $900,000, of which Hun attributed $60,000 to the normal spoilage and $30,000 to abnormal spoilage. We know what they are. Normal spoilage are the losses expected in the production process, but the abnormal spoilage are not expected. We keep the normal spoilage as a part of product, whereas the abnormal spoilage is treated separately as a period loss. So what he should do, Hun should account for the spoilage as $60,000. This one should be the inventoriable cost as just discussed, and the abnormal spoilage, it is considered as a period cost. It is not considered as a part of product cost. So we got D to be the correct option. Weighted average and first in first out equivalent units would be the same in a period when there is no opening stock. When the opening stock doesn't exist, I'm sure you would remember that when there is no opening stock, FIFO and the weighted average equivalent units would be the same. So straightforward, look no further. A is your correct option. Smile Labs develops 35 mm film using a 4-step process that moves progressively through 4 departments. The company specializes in overnight service and has the largest drugstore chain as its primary customer. Currently, direct labor, direct material, and overhead are accumulated by department. The cost accumulation system that best describes the system Smile Lab is using is operations costing. No, because operation costing, as we discussed in our overview, it's a hybrid system that it takes in job order costing and the process costing together. And it is recommended in situations where company produces different types of products. But here we have just a single item that goes through different processes, so this is not correct. Activity-based costing. Activity-based costing is a system we discussed. It will add up all the costs for each activity, and then the cost is allocated based upon different drivers, and the cost is transferred to the cost objects. We have a single product here that passes through different processes. Job order costing, again it is incorrect because in job order costing, products and services are identifiable as separate units. Here they move together in different processes. So the most appropriate option is going to be the process costing. So in process costing, costs are accumulated by departments, by processes, not by jobs, not by activities, not by operations. So without doubt, this is our correct option. Which of the following alternatives correctly classifies the business application to the appropriate costing system? Wallpaper manufacturing, wallpaper would move from different departments from one to another, different processes. So you should recommend process costing for wallpaper manufacturing, not job. And oil refinery, that is right. We use process costing for oil refinery. Aircraft assembly, it's separately identifiable, so it should be job order costing. Makes sense, it's the right one. But public accounting firm, it has different assignments, engagements, separately identifiable, so it would also use job costing. And we are looking for process costing in the second column and job costing system in the first column. So this B is not right as well. Even both are job, but we are looking for the job in first column, process in the second one. C, paint manufacturing. This involves process costing where the different processes and departments, and retail banking again involves process costing. Different departments are involved. So this is process costing also. Print shop manufacturer. Print jobs are highly specific customer driven. So print shop manufacturer would be job. In beverage drink again is a process costing system would be employed. So we have now, this is the perfect arrangement here. Print shop requires job order costing and it is in the right column, and beverage drink process costing. So that makes D to be the correct option. Now what kind of organizations would use job costing? If there is construction of buildings or ships, aircraft assembly, printing, special purpose machinery, public accounting firm, management consulting firm, repair shops, industrial research projects. So they will most likely use the job order costing system. The process costing system is generally used by the firms that are engaged in gasoline and oil production, chemicals, steel, textile, plastics, paints, canneries, rubber, so on and so forth. Food processing, glass, mining, cement, check clearing in banks even. Food preparation in fast food outlets. So you need to know which type of costing system is suitable in a given situation. Next, in a traditional job order cost system, the issue of indirect material is being issued to production department increases what? Mind the word, we're looking for increase in any of the following. First, stores control. When you issue indirect material, you are debiting your FH control account and you're crediting your stores. So stores account is being credited, so it is decreasing, not increasing. So first option is incorrect. There is stores control account, but it is decreasing. We are looking for the one that is increasing. B, work in process control account. Work in process control account, it is debited when the direct material and labor are incurred, but the indirect material is transferred to the factory overhead control account, not in the work in process account. So this is basically incorrect. Factory overhead control account. Now this is correct. Factory overhead control account is debited when indirect material is issued to production. So FOH control debit, stores credit. So that shows that FOH control is increasing. So this is the right option. Why not D? Factory overhead applied. This is the entry we make when we issue material and labor to work in process debit, material credit, and your wages payable credit, right? So when overheads are applied, we debit the work in process account and credit the FOH applied account, remember. FOH applied account. So this is how we transfer the prime cost in our production account, and this is how we transfer or apply our overheads to work in process account. So work in factory overhead applied account is reducing, it's being credited, not increasing. So the correct option is C, we already agreed to it. The following information concerns forming's equivalent units in May 2000X1. We have beginning work in process, which is 50% complete. Units started 8,000. Units completed and transferred 7,000. And ending work in process is 80% complete. Using the weighted average method, what were the forming's May 2000X1 equivalent units? I told you you need to segregate your production units into three populations: beginning work in process, started and completed, and ending work in process. Even though your book recommends to combine these two, but there's no harm. You will at least have more detailed information and you can play around with the numbers. So we have 2,000 units in the beginning work in process. We completed 7,000 units during the period. Out of these, 2,000 were in the beginning work in process. That would mean that 5,000 were the units that we started and completed during the period. And the ending work in process is 2,500. All right, now, since under the weighted average method, you know beginning work in process and started and completed, they are always considered 100%. So I'm just going to quote, these are the EUPs, equivalent units of production for material conversion cost, whatever is given. Now the ending work in process is 2,500 units and it is 80% complete, meaning thereby they are 2,000 equivalent units. So what I did, it simply took 80% of 2,500. So adding these up will give you 9,000. So using weighted average method, what were forming's May equivalent units? It's going to be B, 9,000. Next, the homogenized milk company uses process costing to value the cost of its individual gallons of milk and its ending inventory. On August 1st, the company had 10,000 gallons of milk on hand that were 75% complete to conversion cost. During the month of August, the company completed 30,000 gallons of milk and transferred it to the finished goods inventory and still had 5,000 gallons remaining in inventory at August 31st, which was 60% complete with regard to conversion cost. What are the equivalent units of production relative to conversion cost only that homogenized would use, assuming either the FIFO or the weighted average method? What you should do, the same thing, you need to split your production quantity into three populations beginning work in process, started and completed, and ending work in process. We had 10,000 units in the beginning work in process, 10,000 gallons of milk. We transferred 30,000 gallons of milk, out of which 10,000 relates to beginning work in process, which means the 20,000 gallons was the one that started, completed, and transferred during the current period. So 10 is the beginning work in process. Out of this 30, 10 is beginning, remaining 20 started and completed, and then we have the ending work in process. So under FIFO and under the weighted average method, you need to calculate the equivalent units for conversion cost. Now listen, under FIFO, these 10,000 gallons of milk, they already had 75% of conversion cost incurred to them. We just added 25% of conversion cost during the current period, so it's going to be 2,500. For weighted average, beginning work in process and started and completed, it is always 100%. And for, of course, FIFO, you also know, started and completed is always 100%. Ending work in process, which is 5,000 complete, it has got 60% of conversion cost incurred. That would make it 3,000, both for FIFO and weighted average. Again, a good point for you. FIFO and weighted average would differ because of the beginning work in process. Otherwise, started and completed and the ending work in process is the same. So if you total, it's going to be 25,500 EUPs of conversion cost for FIFO and 33,000 under weighted average. So that would make B to be the correct option. During the current year, the following manufacturing activity took place for a company's products given below. Beginning work in process 70% complete. Units started into production during the year 150,000. Units completed during the year 140, and ending work in process, which is 25% complete, is 20,000. What was the number of equivalent units produced using the first in, first out method? Now, first of all, since these units were 70% complete, we would have added 30% work during the period. So just take 30% of it, you get 3,000. Now we completed 140,000 units during the period, out of which 10,000 were already available in the beginning work in process. So the units started and completed, remember S and C is 140, and always for FIFO, remember S and C is the units completed less units in the opening work in process. Always 140 less 10, that will give you 130. And the ending work in process, 20,000 units, they are 25% complete. So simply take 25% of this number and that will give you 5,000. Adding all these up will give you 138,000, and that's your equivalent number of units under the FIFO method. Now let's say if you are required to calculate the EUPs under the weighted average method, so you will take full 10,000 under weighted average, and rest of the numbers are the same as we discussed earlier. So then it's going to be 135, 10, 145. But that's not the answer. Under FIFO, 138 is. Kernel Manufacturing uses process costing system to manufacture laptop computers. The following information summarizes operations relating to laptop computer model KJK20 during the quarter ending March 31st. Work in process 100 units, this much material added. Started during quarter 500, completed 400, work in process 200, and cost added during the current period 750,000. What exactly are we required to do? Beginning work in process inventory was 50% complete for direct material. Okay. 50% for direct material. Ending work in process inventory was 75% complete for direct material. All right. What were the EUPs using FIFO method with regard to material for the quarter ended March 31st? Do what you do. Beginning work in process, started and completed, and ending work in process. How many units were there? 100, right? And since it was 50% complete with regard to material, so we would have added 50% additional, so that would mean just 50. Started and completed. Remember, you completed 400 units during the period, and how do we calculate SNC? Completed less beginning work in process, that's 300. And the ending work in process, that is 200 units, it is 75% complete with regard to material, so take 75% of 200, it's going to be 150, and add all these up. it's going to be 500. So your EOPs for material during the period under FIFO method is 500. That's perfect match for option B. Next, Lucy Sportswear manufactures a specialty line of t-shirts using a job order cost system. During March, the following costs were incurred in completing job ICU2. Direct material 13,700, direct labor 4,800, administrative cost 1,400, selling 5,600. Factory overhead is applied at the rate of $25 per machine hour, and this particular job ICU2 required 800 machine hours, and this is what we will use to apply the overheads. If job ICU2 resulted in 7,000 good shirts, the cost of goods sold per unit. Now this is important. This is a job order costing question. Remember, cost of goods sold only includes direct material, direct labor, and the applied manufacturing overhead. So, and it does not require inclusion of administrative cost or selling cost. So your direct material is 13,700, your direct labor is 4,800. You need to apply the manufacturing overhead at the rate of $25 per machine hour. How many machine hours were required by this job? 800. So multiplying 25 with 800 should give you 20,000. This is the total cost incurred on these 7,000 units. So dividing the total cost on these 7,000 units should give you $5.5. This is the per unit cost of goods sold. That makes D to be the correct option. Okay, now this one is a huge question, and there are many questions related to this information. Question number 11, that is right in front of us. Then we have question number 12, question number 21, question number 22, and question number 39. All these questions are linked to this information given here. So we are going to solve it completely A to Z under FIFO method, because this part requires us to solve using FIFO. So we are going to use FIFO in solving this question. We will solve all these parts and then we will match our answers. Okay, so let us first read what the question is all about. Kimbat Manufacturing uses process cost system to manufacture dust density sensors for the mining industry. The following information pertains to operations for the month of May. We have been given the beginning inventory, May 1st, started in production in May, completed production during May, and ending work in process. Okay. The beginning inventory was 60% complete for materials and 20% complete for conversion cost. The ending inventory was 90% complete for materials and 40% complete for conversion cost. Costs pertaining to the month of May are as follows. Beginning inventory costs are materials 54,560. This was added in the beginning work in process. Direct labor 2320 and factory overhead 15,240. This was included as a conversion cost in your beginning work in process. Cost incurred during May, material 468,000, labor 182,880, and factory overhead 391,160. Using the first in first out method, the equivalent units of production for material are, as I told you that there are 5 questions related to this information. First question 11 requires to calculate the EUPs for material. We are going to solve it all completely from start to end, and then we will match our options. The first step in any process costing question is to separate your production into 3 categories: beginning work in process, started and completed, and ending work in process. Now, how many units were there? 16,000. Just write it here. You completed 92,000 units, out of which 16,000 were in the beginning work in process. So how do we calculate started and completed? Units completed less beginning work in process. So 92 less 16 will give you 76,000. Ending work in process is already given, 24. All right. Now let us calculate the EUPs for material and EUPs for conversion cost. All right. It says that 60% material was already added in the previous period in your beginning work in process. That means we would have added the remaining 40%. So it's going to be 16,000's 40%. It is 6,400. Started and completed, by definition, they are always 100% complete. Ending work in process for material is 90% complete. So you're going to multiply 24,000 ending units with 90%. it gives you 21600. If you add all of these, you will get 104,000. These are the EUPs of material. Let us do same for conversion cost. Conversion cost, 20% was added in the previous period. That means we would have added 80% in the current period. 16,000 times 80%, that is 12,800. Started and completed is always 100%. Ending work in process had conversion cost up to 40%. So 24,000 multiplied by 40%, that is 9,600. If you add all of these, you should get 98,400. Now, this is the answer to question number 11 we are doing right now. 104,000, these are the EUPs of material, and this matches perfectly with your option A. Next, question number 12, it requires you to calculate the EUPs of conversion cost, which we already have. So that means question 12 is already done, 98,400. In question 21, which is related to FIFO, for the same information, question 21 requires us to calculate the conversion cost per equivalent unit, and question 22 would require us to calculate the material cost per EUP, and question 39 requires the valuation of work in process. So let us do this one by one. Okay, conversion cost EUP is calculated. Next step is to calculate in question number 21, conversion cost per unit of EUP. Since FIFO considers only the current cost, so the current conversion cost, direct labor, and the effective overhead, if added and divided with the 98,400, let me do this for you, 5.833. So the unit rate for conversion cost for EUP is 5.833, 5.833, or just 5.83, right? So this is the answer to question number 21, and I'm giving the same color. 21 requires us to calculate the conversion cost per EUP. Next, question 22 requires us to calculate the rate for material per EUP under FIFO method. So the cost related to material incurred during May is 468,000. We are going to take 468,000 and divide it with the EUPs of material, divided by 104,000. That gives you a perfect answer, 4.5. $4.5 per EUP of material, and that is the answer to question number 22. What about question number 39? Question 39, let me mark it as well. This is the answer to question number 11. This is the answer to question number 12. Right? This is the answer to question number 21. This is the answer to question number 22. The last question now we have 39. This is the valuation of your ending work in process. It's fairly straightforward. Okay, in order to value your ending work in process, what we have not 24,000 units. Remember, for valuation of your ending work in process, you will take the EUPs, not the actual units. Remember, 21,600 EUPs of material to be valued at the rate of 4.5 plus 9,600 EUPs of conversion cost to be valued at the rate of 5.833. So if you do the simple maths, it will give you 153,168. That would be the answer to question number 39. Now let me explain what you're going to do if you are required to calculate the value of goods transferred under the FIFO method. This is not required as such, but you need to know how do we value the finished goods or the goods transferred to the next department under FIFO. Because normally we say FIFO doesn't consider the previous cost, it considers only the current cost. Then what about the previous cost? Do we just totally ignore that? That's what you're going to learn now. So how do we value the goods transferred to the next department under FIFO? Let me do this for you. Finished goods or the goods completed and transferred to the next department. Now listen, these are the units of material EUPs that were completed. 6,400 in the beginning work in process and 76,000 in the started and completed. So take these two, 6,400 in the beginning work in process that was completed and 76,000 started and completed, to be valued at the rate of 4.5. This is the material added during the current period in those units that were completed. What about the material that was added in the previous period? Now you need to add that as a separate bundle here. Now this was the material in the opening work in process added in the previous period, 54560. Now what about the conversion cost? These are the units of conversion cost during the current period. 12,800 plus 76,000 multiplied with the 5.833, and to this we add the conversion cost available in the opening work in process, 2320 and 15240. 2320 and 15240. This is how we add the previous period cost of material and conversion cost. If you solve this all, it will give you a total of 978,890. So please note down these numbers. You will need them. You will need these numbers when we will do the same question using the weighted average method. 978,890 under FIFO. This is the value of goods transferred to the next department under FIFO, and 153,168. That is the cost of the ending work in process. So this is your question number 12, requiring you to, using FIFO method, the equivalent units of production for conversion cost. We have already done it. Question 12 was already done. Question 21, requiring us to calculate the EUP cost for conversion cost. Conversion cost per EUP, we did it previously, it was 5.833. Question 22. Using FIFO, the equivalent unit cost of material, we did it earlier, it was 4.5. Question 39. Using FIFO, the total cost of units in the ending work in process at 31st May, we did it already, it was 153,168, a perfect match, option A. So question number 11, 12, 21, 22, 39, all done. Next we have question 13. Black Incorporated employs a weighted average method in its process costing system. Black's work in process inventory on June 30th consisted of 40,000 units. These units were 100% complete with respect to materials and 60% complete with respect to conversion cost. The equivalent unit cost are $5 for materials, $7 for conversion cost. What is the total cost of the June 30th work in process? So what you're going to do, since we have been just given the ending work in process units, so you don't need to, and you can't make the three population of your units, beginning work in process, started and completed, and ending work in process. So what we can do is just take the units given. Since all material has been added, 100% material is added, so it's going to be 40,000, and it says 60% complete with respect to conversion cost. So these 40,000 units are 60% complete with respect to conversion cost, meaning thereby 60% of 40,000, that is 24,000 units. Now we have been given the rate also. $5 is the rate for material, $7 for conversion cost. So it's going to be 200,000 for material and 24,000 times 7, 168,000 for conversion cost. If you add these two, you get $368,000. That perfectly matches with your option C. Based on the following data, what is the cost of goods sold for the company? Sales is given, net purchase of raw material, cost of goods manufactured, marketing and administrative expenses, indirect material, work in process opening closing, finished goods opening closing. We need CGS, and we have been given the cost of goods manufactured. I hope you would remember cost of goods sold is equal to cost of goods manufactured plus opening stock of finished goods minus closing stock of finished goods. You have this and this, that's all. Cost of goods sold is $800,000. Opening stock of finished goods is $100,000, and the closing stock of finished goods is $500,000. Simplify and you get your answer. 900,000 less 500, so it's $400,000. That makes B to be the correct option. Okay, in the past, 4 direct labor hours were required to produce each unit of product Y. Material cost 200 per unit. The direct labor rate is $20 per hour. And the factory overhead was 3 times the direct labor. That is the factory overhead application rate. In budgeting for the next year, management is planning to outsource some manufacturing activities and to further automate others. Management estimate that these plans will reduce the labor hours by 25%, increase the factory overhead rate to 3.6 times from the current 3 times of the direct labor cost, and increase the material cost by $30 per unit. Management plans to manufacture 10,000 units. What amount should the management budget for the cost of goods manufactured? Okay. We know, as per the information given, the manufacturing cost is sum of direct material, direct labor, and the manufacturing overhead. What we see is that direct material cost is going to go up by $30, so the new cost is going to be $230. Direct labor. Initially, it required us 4 hours, given right here, 4 hours of direct labor, which were paid at the rate of $20 per hour. But it says that the labor cost is going to reduce by 25%, which means 4 hours at the rate of $20, which is going to be reduced by 25%, just multiply it with 75%. 4 hours at the rate of new rate, that is $20 times 75%, the labor cost is going to be $60. The manufacturing overhead rate or factory overhead rate is 3.6 times of the direct labor cost. This is your direct labor cost, so manufacturing overhead is going to be 3.6 times of new labor cost of $60. So 3.6 times 60 gives you 216. If you add all these, 216 for MOH, 60 for labor, 230 for materials, gives you 506. This is your unit cost. You're planning to produce 10,000 units, just multiply this with 10,000. What you get is a straightforward B, 5.06 million. That makes B to be the correct option. Below are data from the income statement of Brown Incorporated. Beginning inventory of finished goods 16, ending inventory finished goods 21, cost of goods sold, gross margin, operating expenses, net income. What was Brown's cost of goods manufactured? There are two ways. Either we can find the cost of goods manufactured from the total manufacturing cost adjusted for work in process, opening and closing, and we don't have them. Else CGM is a part of CGS formula. CGS is equal to cost of goods manufactured plus opening stock of finished goods minus closing stock of finished goods. That can work. That can work surely. We have CGS, which is 43,000. We want to find CGM, call it X. We have opening stock of finished good, that is 16,000. And we have the closing stock of finished good, that is 21,000. So making X the subject of this equation, it's going to be 43,000 plus 21,000 less 16,000, and the net would be the CGM, and it's going to be 48,000, which is your option C. Mary Company, two major categories of factory overheads are material handling and the quality control. These are the two major categories of manufacturing overhead or factory overhead. The cost expected for these categories for the coming year are as follows. Material handling is going to be 120, quality inspection $200,000. Fine. The plant currently applies overhead based on the direct labor hours. This is the application base. How do we establish our manufacturing overhead rate or for rate for these specific overheads? Estimated overheads, which is 120, 200, that's 320,000 divided by the activity driver or the suitable application base. In this case, we have direct labor hours, and how many labor hours are planned? The estimated labor hours are going to be $80,000, 80,000 labor hours. That will give you the application rate of $4 per labor hour. Now, it further says the plant manager is asked to submit a bid and assembles the following data on a proposed job. The proposed job would require $4,000 of material. It would require $6,000 of direct labor cost. Now we need to apply the manufacturing overhead rate, that is $4 per labor hour. This job would require 2,000 labor hours. That means the manufacturing overhead applied would be 8,000. This 8,000 will contain a fraction of material handling and quality inspection. If you add all these, you should get your answer. $18,000 is the estimated cost for this proposed job D. A company uses a process costing system to record inventory cost data at the end of the month. Work in process inventory 100 units, which are 100% complete to material, 80% to conversion cost. Finished goods inventory, which means it's totally complete with regard to material and conversion cost. The company uses the weighted average method to compute the cost. Its total cost for the month are $10,000 for direct material and $19,600 for conversion cost. What is the total conversion cost per EUP? So for conversion cost, 900 units of finished goods, 100% complete, so EUPs of conversion cost 900. Work in process 100 units, only up to 80% complete with regard to conversion cost, so that's going to be 100 times 80%, that's 80. So the EUPs of conversion cost are 980. The conversion cost under the weighted average method is 19,600. 19,600 upon 980 gives you the rate of $20. What is the total conversion cost per EUP? That's 20. B is the correct option. The following information pertains to lap company's Palo division for the month of April. Beginning in process 15,000. This is the material in that bunch of units. Started in April 40,000. Material $18,000. Units completed. Ending work in process. What are we required to do? All materials are added at the beginning of the process. Using the weighted average method, the cost per EUP for material. First and foremost, what we have been doing, splitting your units into 3 populations: beginning work in process, started and completed, and ending work in process. Beginning work in process, 15,000, fully complete with regard to material. If we completed a total of 42,500 units, out of that 15,000 were from the beginning work in process. So I told you SNC is equal to units completed minus beginning work in process. The difference would be the started and complete. It's going to be 27,500 and ending work in process given a straightforward 12,500. Now, remember, in this process, material is added at the beginning of the process, which means all these units under the weighted average are complete with regard to material. So if you just add all of these up, it's going to give you 55,000. Now, this is the cost of material in the beginning work in process. This is the cost of material added during the period. Under weighted average, we consider all the costs, previous period and current periods combined, and divide it with the EUPs for the current period. So it's going to be 18 plus 5,500, 18,000 plus 5,500 divided by 55,000. That gives you 0.427, which is approximately 0.43. That matches perfectly with your option D. Now the same question again, but this time we will be doing it using the weighted average method. Question number 20, question number 26, and question number 38. Question number 20 would ask you to calculate the cost, material cost per EUP. Question 26 will ask you to calculate the conversion cost per EUP, and question 38 will ask you to calculate the value of work in process. So these are the specific requirements of these 3 questions. Let us do what we have been doing. We will split our production quantities into 3 populations: beginning work in process, started and completed, and ending work in process. But this time we are going to use the weighted average method. Beginning work in process 16,000, and we discussed that, and we know that beginning work in process under the weighted average method is always 100% complete with regard to material and conversion cost. So 16,000 for material and 16,000 for conversion cost. How do we calculate SNC? SNC is the units completed less beginning work in process, that is 76,000, and they are always complete with regard to material and conversion cost. Finally, the ending work in process, we have 24,000 in the ending work in process, and it says that the ending work in process is 90% complete with regard to material. 24,000 times 90% gives you 21,600, and the ending work in process is 40% complete with regard to conversion cost. 24,000 times 40%, that gives you 9,600. So your EOPs of material are 113,600 and EOPs of conversion cost is 101,600. 600. Now, first we need to calculate for the first question, the 20th question. It says you need to calculate the weighted average method EUP for material. Remember, under the weighted average method, your previous cost of material, the cost of material in the beginning work in process, and the material added during the current period, it is combined and divided with the EUPs. So if you add 54, 560 opening material, 468 material added during the current period divided by 113,600, that gives you $4.6. 4.6. This is the material rate per EUP. Answer to your question number 20th. Question 26 requires you to calculate the conversion cost per EUP. Remember, under the weighted average method, the conversion cost, sum of labor and factory overhead included in the beginning work in process, and the conversion cost, labor and factory overhead added during the current period, it is all added and divided with the EUPs of conversion cost. I'm going to do it. 2320 plus 15240 plus 182 880 plus 391 160 divided by 101 600. That gives me a perfect $6 per EUP. That is $6 per EUP, and that's the requirement of our question number 26. Now what about question 38? Question 38 requires you to calculate the value of your ending work in process. How do we do that? Ending work in process valuation is required. Ending work in process carries 21,600 units of material, EUPs, to be valued at the rate of 4.6, and 9,600 EUPs of conversion cost to be valued at the rate of 6. If you solve this all, it will give you 156,960. This is the value of ending work in process using weighted average, which is more or less same to the value we calculated under the, almost similar under the method FIFO. This is the value of ending work in process using the first in first out method, 153,168. Now the last part, which is basically not required as per the question, but we just want to do it. We have done all question 20, 26, and this one for question 38. Okay, now let us find the value of the goods transferred to the next department. Remember, we completed a total of 92,000 units as per the question. So these 92,000 units fully completed will carry the rate of 4.6 for material, and these 92,000 units completed will carry the rate for 6 for conversion cost. So if you simplify, this will give you 975,200. So this is the complete value of the goods transferred to the next department. Let us compare it with the cost we calculated under FIFO. See, it is 978,890. So the marked difference between FIFO and weighted average is that FIFO considers current cost for rate calculation, but when the goods are transferred, the previous cost added in the beginning work in process is combined and transferred to the next department. So we got 978,890. So remember, FIFO does not ignore the cost incurred in the previous period. It is added when the goods are transferred to the next department. Question number 21 and question number 22, they have already been completed in a sequence of questions we did previously as a part of question number 11, 12, 21, 22, and 39. They were all done together under the FIFO method. So that means now we should jump to question number 23. Okay, now what this question is all about. It says Jonathan Manufacturing adopted a job costing system. For the current year, budgeted cost driver activity level for direct labor hours and direct labor cost were $20,000 or 20,000 hours and $100,000 respectively. What basically it means is that your direct labor hours planned are 20,000 and your direct labor cost based upon this planned hour is 100,000. That means you pay $5 per hour to your workers. Okay. In addition, budgeted variable and fixed factory overheads were 50 and 25. 50 represents your budgeted variable overheads and 25 represents your budgeted fixed overheads. Actual cost and hours for the year were as follows: labor hours actual, labor cost actual, machine hours actual. For a particular job, 1500 labor hours were used. Using the direct labor hour as a cost driver for your indirect cost, of course, because you use labor hours, machine hours, units as a driver or as an allocation base for your indirect cost. What amount of overhead should be applied to this job? Let us first calculate the manufacturing overhead rate driven by the labor hours. You take the estimated overheads, fixed and variable combined, 75, and you take the estimated labor hours, that's 20,000. That gives you a rate of $3.75 per labor hour. That's the rate application we are going to make. It's called the overhead absorption rate, recovery rate, allocation rate, whatever you want to call it. Since this job requires 1500 labor hours, so estimated manufacturing overhead that is going to be applied for this job is going to be 1500 hours times 3.75. So it's going to be 5625. That perfectly matches with your option C. It says Kerner Manufacturing uses process cost system to manufacture laptop computers. The following information summarizes operations relating to laptop computer model KG case 20 during the quarter. Beginning work in process, started, completed overall, and the ending work in process. This was the direct labor cost at the start, cost at the end. What are we required to do? Beginning work in process was 50% complete for direct labor. Ending work in process was 75% complete for direct labor cost. What is the total value of direct labor cost in the ending work in process inventory using the weighted average unit cost inventory valuation method? What we know that we need to divide our population of units into three categories: beginning work in process, started and completed, and ending work in process. We had 100 units in beginning work in process. We completed 400 units during the period, out of which 100 were beginning. That means started and completed, which is equal to completed less beginning work in process is 300 and ending work in process is 200. Under weighted average, beginning work in process and started and completed, they are always 100%. Ending work in process, which has 200 units, it is 75% complete with regard to the labor cost. Is going to be 150. So if you add all these, 550. Now what you're going to do, add these two, labor cost opening plus what we added in the current period, and divide it with 550. So 720 plus 50, 770. Total labor cost divided by 550 UPs, it gives $1,400 per UP of labor. If this is the rate, we need to value the closing inventory, which has physical 200 units, but for the purpose of valuation, you will take the EUPs of labor. 150 multiplied by 1400, that gives you 210. This is the valuation of your inventory for labor cost, and that will give you C to be the correct option. This question is exactly the same. What he has done, he simply replaced direct labor with direct material. You will do everything as is, and simply take the numbers previous. 770 divided by the EUPs will be even 550. The result will be 1400 per EUP of material. Since you have 150 units in the EUP of material and multiplied with 1400, exactly the same answer. It's absolutely the same with this material replaced with the word labor. 210. Question 26 has already been done as a sequence of questions from question 20, 26 and 38 using the weighted average method, so it's already done. Alright, now we have another set of questions. This is the question that would require you to calculate the FOH control over or under applied. The next question related to this information is question 30th. That will require you to calculate the total manufacturing cost, and the same question 32 with the same information will require you to calculate the CGM. So we are going to do all of these in this question and we'll match our options. Alex's company had the following inventories at the beginning and the end of the month: finished goods, opening, closing, work in process, opening, closing, direct material, opening, closing. The following additional information was available for the month of January. We have direct material purchased, returns, transportation in, direct labor, and actual factory overhead. Alex company applies factory overhead at the rate of 60% of your direct labor cost. And any over-applied or under-applied overhead is deferred until the end of the year. December 31st, Alex company's balance in the factory overhead control account for January was. Right. Now, first of all, this is the actual factory overhead. And the application rate is 60% of direct labor cost. Fine. This is your direct labor cost. And 60% of this is going to be 180. Now you can see that overhead applied, the manufacturing overhead or factory overhead applied is 60% of your direct labor, which is 180. Whereas your actual factory overhead, it is 175. So you applied more. FOH applied is 180. FOH actual is 175. So how do we net it off? There are two ways. Let me tell you how you can do it. Either you maintain two separate accounts, one for the overhead applied, other for the overhead control. All the actual expenses are listed on the debit side. All the applied come on the credit side of this account. Like here, the applied is 180 and here the actual is 175. At the end, what you do, either you transfer applied to control or control to applied. That's what we do in accounting. So in either case, your overhead will have a credit balance because the credit is more than the debit. So you will have a credit balance of fixed factory overhead account. So it is clearly over applied by 5,000. So that makes D to be the correct option. The second alternative you may have is to use a single account where applied is shown on the credit side, actual on the debit side. Actual was 175, applied during the period was 180. Eventually you end up with the same answer. You will have a credit balance at the end. Over applied by 5,000 will have a credit balance. So this is the next question in line. Question 27 we have just done. This is question 30th, requiring you to calculate the total manufacturing cost. Let's read the requirement. What is the total manufacturing cost for January? So let me show you how do we calculate this. Total manufacturing cost is equal to the direct material used in production. To that you add direct labor cost plus the factory overhead applied or actual as the case may be. In this question we are using the application, so we will use the FOH applied. We have the direct labor given straight away, $300,000. FOH applied is 60% of your direct labor cost, that is 180. This is already given. What you need is direct material use. How we calculate direct material use? Remember, direct material used in production is equal to the opening stock of raw material plus purchases plus transportation in minus any returns and allowances less the closing stock of raw material. We have everything. Opening stock of raw material is 134. I'm just omitting zeros. Purchase of the direct material is given as 189. Transportation in is 3. Returns are 1000 and the closing stock is 124. So the net is 201 and of course 30,000. So this is the direct material use which will you input here, and this will give you the total manufacturing cost. Direct material use, direct labor and FOH applied, factory overhead applied. It's 681,000. So that gives you A to be the correct option. Next question, number 32, would use the same information. It would require you to calculate the cost of goods manufactured, and you will use this total manufacturing cost there. Let me take you there to question number 32. Same question, but this time you need the cost of goods manufactured. Remember, cost of goods manufactured is equal to total manufacturing cost, which we calculated just now, 681,000. And to this you add your work in process opening and you deduct your work in process closing. We have them all. Work in process opening given as 235 and work in process closing 251. Right? If you simplify, it will give you 665,000. This is your cost of goods manufactured, a perfect match with your option A. Now let's say if we are required to calculate the cost of goods sold, we are just doing it on our own. 665 is the cost of goods manufactured 665. If you are required to calculate the cost of goods sold, that is equal to cost of goods manufactured, which we just calculated. To this you add your finished goods opening stock and you deduct your finished goods closing stock, and there you go. Cost of goods manufactured is 665, finished goods opening is 125, finished goods closing is 117, and the net will give you the cost of goods sold. Simple as that. That will be 673,000. So all these questions related to Alex company have been done. Question 27, question 30th, and question 32. Now the next question in line is question 28. And again it's a set of few questions. Question number 28 will require you to calculate the FOH under or over applied. Question 31 will require you to calculate the cost of goods manufactured. Question 34 will require you to calculate the total manufacturing cost. So let us just do all of them right here. FOH under or over applied. This is the FOH actual. And here it says that the factory overhead control account and charges factory, you use it as a single factory overhead control account and charges factory overhead to production at 70% of direct labor. 70% of direct labor means the overhead applied is 140, whereas the actual is 132. Again, 8,000 over applied, and it will have a credit balance in your control account as we discussed a little while ago. So that gives you A to be the correct option. Now we have to calculate the cost of goods manufactured and total manufacturing cost. So we need to first calculate the total manufacturing cost, which is equal to the direct material used in production. Let me write down the formula. Total manufacturing cost is the direct material used plus direct labor plus factory overhead applied. We have everything. How do you calculate direct material used? We just discussed this a little while ago. Opening stock of your direct material plus purchase plus transportation in less returns and allowances, return less your closing stock of raw material. This will give you the raw material consumed. So direct material use is 170,000. Direct labor given here is $200,000, and factory overhead applied is 70% of your direct labor, that is 140. If you add all of these, this will give you the total manufacturing cost 510, and that would be the answer to your question number 34. So this is your question 34, and here you get 510. So this question is done. Now let us do question number 31. Here we have to calculate the cost of goods manufactured, which is equal to total manufacturing cost, which we just calculated. To this we add, we calculated total manufacturing cost to be 510. To this we add our beginning work in process 145 and deduct your ending work in process. This will give you the cost of goods manufactured. So answer to the question number 31 is going to be 484,000 as your cost of goods manufactured. This is it. 484, that's the cost of goods manufactured and transferred to the finished goods. So this part is done as well. Question 31 gone. Okay, so moving in sequence now, next question we have is question number 29. It says, based on the following data, what is the gross profit for this company? We have been given the sales. It's a very straightforward question. Sales minus cost of goods sold. Do we have cost of goods sold? No, we don't. We can find cost of goods sold. Yes, we can. So sales minus cost of goods sold is the gross profit. Let us calculate the cost of goods sold using the CGM. We know cost of goods sold is the cost of goods manufactured. To this you add your finished goods opening, deduct your finished goods closing, and that gives you $400,000 as your CGS. This CGS is to be deducted from sales in order to calculate your gross profit, and that's a straightforward $600,000, and this perfectly matches with your option C. 29 done just now. 30 already done, 31 done, 32 done, Now we have question 33. What is the cost of ending inventory given the following factors? We have been given the beginning inventory, total production cost, cost of goods sold, and the direct labor. In this question, please note there is no work in process, no finished goods, so there's simply CGS that we can directly calculate. We know cost of goods sold is equal to the total production cost plus opening stock of whatever is given as inventory, opening stock of the units minus the closing stock, and you should get what you want. Cost of goods sold is given as $55,000. Total production cost is given as $60,000. Opening stock is given in $5,000. You can make C the subject of the equation and find the answer. C is equal to 60 plus 5 less 55. So C is equal to 10. That is the closing stock. Closing ending inventory is 10. That makes B to be the correct option. 34 is already done as a part of sequence of questions we did a little while ago. Question 28, question 31 and 34. They were done in a single go. Under PIC company's job order costing system, manufacturing overhead is applied to work in process using a predetermined annual overhead rate. During January year 1, PIC's transactions included the following: direct material issued to production, indirect material, manufacturing overhead incurred, manufacturing overhead applied, and direct labor cost. What are we required to calculate? PIC had neither beginning or nor ending work in process inventory. What was the cost of jobs completed in January year 1? So in other words, you have to calculate the total manufacturing cost, which is equal to the cost of material used, labor incurred, plus manufacturing overhead applied. And you have all of these here. This is the direct material. This is the manufacturing overhead applied. Remember, applied is taken. When both are given, you take applied. And you also have the direct labor cost. Just plug in these numbers. 90 plus 113 plus 107 gives you $310,000. And that's your total cost of the jobs completed. And that's B. Okay, now this one is a very interesting question. DJ company has a job order cost system. The following debits and credits appeared in the work in process account for the month of March. Opening balance, let us draw up the work in process account. Opening balance brought down is 12. Direct material 40, of course, debit. Direct labor, debit. This is DM, this is DL. Manufacturing overhead applied 27. Now it further says that this negative means credit. Finished goods 100,000 was transferred to the finished goods, which means if you balance this account, the debit side has a total of side 109, credit 100, which means the closing balance is 9,000. That is the carry down. What it says here, DG company applies overhead at a predetermined rate of 90% of direct labor. Okay. Job number 101, the only job still in process at the end of March, has been charged with manufacturing overhead of 2250. What was the amount of direct material charged to job 101? If this is the only uncompleted job, then this balance $9,000 is basically for this particular job, job 101, right? Job 101, and it has a closing balance of $9,000, right? It carried down. Then it should have three things on the debit: direct material, direct labor, and manufacturing overhead. We have been given the manufacturing overhead, that is 2,250. We can write it as 2.25. And since the overhead is applied at the rate of 90% of direct labor, so this 2.25 is 90% of direct labor. If 2.25 is 90% of direct labor, then what is direct labor? 2.25 divided by 90%. That's going to be 2,500, 2.5. Right? So this is your direct labor 2.5. 2.25 is manufacturing overhead, which is 90% of 2.5. If you balance both these sides, the balancing figure should be the direct material charge to this job. So you take 9 on the credit, less 2.25, less 2.5 gives you 4.25. So 4.25 is the direct material charge to this job, 4.25, and that makes C to be the correct option. Okay, now what we have to calculate, what is the net income for the company? We have sales, yes. Do we have a cost of goods sold? No, but we have the elements available. Cost of goods manufactured. To this, if you add the opening finished goods and deduct the closing finished goods, 800,000 plus 100,000 less 400,000, it gives you the cost of goods sold. It's going to be simply $500,000. So you are going to write sales as 1 million. From this, deduct your cost of goods sold. Net purchase is already included. Marketing admin cost, yes, 250. Indirect manufacturing cost, this is already included in the cost of goods manufactured. Work in process is already accounted for when we calculate cost of goods manufactured. Remember, cost of goods manufactured is the total manufacturing cost plus work in process opening minus work in process closing. So they have already been taken care of. You just need to solve this million less 500,000 less 250 for marketing and admin cost. There you go. You got your answer. B. Okay, this question was already done as a sequence of question 20, 26 and 38 under the weighted average method. We calculated the material cost per equivalent unit, 26 for conversion cost, and then we in the question 38 we will be required to calculate the value work in process, already done in the sequence of these questions. Yes, question number 39. This question requires you to calculate the value of work in process under FIFO, and this question has already been done in a sequence of question 11, 12, 21, 22 and 39. 11 asked us to calculate the material cost per EUP, conversion cost per EUP, then we were required to calculate the per unit cost, and then finally we were required to calculate the work in process. All were there done in sequence. Next question number 40. A company estimates that it will sell 100,000 units of finished goods in March. That's your planned sale, or what you call the budgeted sales. Each finished goods require 5 feet of raw materials. Projected 1st March inventory balance is 10,000 of finished goods and 40,000 feet of raw material. This is the opening stock. Desired March 31st inventory levels are 9,000 units of finished goods and 42,000 feet of raw material. What amount of raw material should the company plan to purchase? Now this is an interesting question. First, you need to draw up the sales budget. This is the input to draw up your production budget. Once you have the production budget, then you go for the direct material purchase budget. We have just been given the sales budget. How do we drive the production budget from sales budget? That's the planned format. You start with the planned sales, or let's call it budgeted sales. To this you add the desired closing stock of finished goods, and from this you deduct the opening stock of finished goods, and everything is given. Planned sale is 100,000 units. The desired closing stock of finished good is given at 9,000 31st March, and the opening stock which we need to deduct of finished good is 10,000 at 1st March. So if you net this up, you get 99,000 units. That's what you're going to produce. This is the planned production or the budgeted production. This will become the foundation of your direct material purchase budget. You will write 99,000 units to be produced, each requiring 5 feet of raw material. 99,000 times 5, you need 495,000 feet of raw material. This is the material needed for production. You'll go the same way. Add the desired closing stock of raw material, and from this deduct the opening stock of raw material, and there you go. Desired closing stock of raw material, I guess it's given here as 42,000 feet. And the opening stock we already have, the desired is 40,000. That needs to be deducted. So if you 495 plus 42 less 40, which basically means 495 plus 2, 497,000 feet. That's what you need to purchase. That's what you need to produce in units, and that's what you need to purchase in feet, the raw material. So that makes A to be the correct option. Next question. Mason Company uses a job order cost system and applies manufacturing overhead to jobs using the predetermined overhead rate based on the direct labor dollars. The rate for the current year is 200% of the direct labor cost. That's how we apply overheads to production. This rate was calculated last December and will be used throughout the current year. Mason had one job 150 in process on August 1st with raw materials cost of 2,000 and direct labor cost of 3,000. During August, the current period, raw materials and direct labor added to the cost to the jobs were as follows. This is the detail for raw material and the direct labor. Actual manufacturing overhead for the month of August were 20,000. During the month, mason completed job 150 and 151. For August, manufacturing overhead was. Now we have just learned that the overhead is applied at the rate of 200% of direct labor. So for the month of August only, we are not concerned what happened in the previous month. Just the current period direct labor cost is 1500. The overhead is applied at the rate of 200% of this. Is going to be 3000 for this job, 10,000, 200% of 5,000, 10,000 and 5,000. So if you add all these or just take the total, then take 200%, your choice. So it's going to be 18,000. This is the total manufacturing overhead applied. This is applied. What the actual was 20,000. So you applied 18. The actual was 20. So that clearly means you underapplied. Your overheads were underapplied by 2,000. This is indeed an interesting question. A company that produces a single product using a continuous process had no work in process on April 1st, no beginning work in process. During the month of April, 10,000 units were started, 9,000 were completed. So basically 9,000 is started and completed. So your ending work in process must be 1,000 units. The ending work in process was complete as to material, but 50% of the conversion cost is added so far. The cost of direct material was 114. The cost of direct labor was 38. Manufacturing overhead is assigned at the rate of 50% of the direct materials. For the purpose of determining the cost of goods manufactured in April, what is the cost per equivalent whole unit? So what you're going to do, write SNC and the ending work in process for material and for conversion cost. Started and completed 9,000. Complete for material and the conversion cost. The ending work in process has 1,000 units and it says that all direct material was added at the beginning, but only 50% of conversion cost was added. The ending work in process was complete as to material and 50% complete as to conversion cost. So which means these 1,000 units, they are complete with regard to material, but only 500 with regard to conversion cost. So equivalent units for material is 10,000. For conversion cost 9,500. Next step is to calculate the rate. How do we do that? Divide your material cost, which is 114,000 with 10,000. This will give you the rate 11.4 per equivalent unit of material. Conversion cost is little twisted, please. Make sure you understand it well. For conversion cost, you have the direct labor given 38,000, right? But the manufacturing overhead is assigned at the rate of 50% of direct material cost. This is your direct material cost. If you take 50% of this number, I'm going to write simply 50% of 114,000. And once I calculate the numerator, I'm going to divide it with the equivalent units of conversion cost. So if I do, I'm going to get a straight number $10. Now, if you ask me to determine what would be the cost per equivalent whole unit, so that will include 11.4 for material and $10 for conversion cost. So it's combined 21.4. That makes B to be the correct option. A company uses process costing to assign product cost. Available inventory information for the period is as follows. We have no beginning work in process. That means the unit started 15,000, completed 13,500, and the ending work in process clearly is the balance between 15 and 13.5. Okay, what are we required to do? The ending inventory was 25% complete as to conversion cost. 100% of direct material was added at the beginning of the process. What was the total cost transferred out? We'll do the same thing what we do. No need to take beginning work in process. Start with the started and completed and the ending work in process. Write material and conversion cost. These 13,500 units, they are complete with regard to material and conversion cost. And these 1,500 ending work in process, they are 100% complete with regard to material, but only 25% complete with regard to conversion cost. So 1,500 times 25%, that'll give you 375. Total 15,000 UPs for material and 13,875 for conversion cost. The next step is to calculate rate. You will divide your material cost 75,000 with the EUPs of material, conversion cost with the EUPs of conversion cost. Now, if you calculate the rate are going to be very nice. Complete whole 5 number for material and $4 for conversion cost. The question says, what was the total cost transferred out? You transferred out 13,500 units to the next department to be valued at the rate of 5 for material and 4 for conversion cost, that is direct labor and overheads combined. So multiply 13,500 with 9, you will get 121,500. That gives you C to be the correct option. The accountant for Champion Brake Incorporated applies overheads based on the machine hour. That's the application base. The budgeted overheads and machine hours for the year were 260,000 and 16,000 respectively. We can use this information to establish our rate. Manufacturing overhead rate based upon machine hour is 260,000 estimated overhead and 16,000 is the estimated activity base. It'll be 16.25 per machine hour. That's the application rate. The actual overheads and machine hours incurred were this, and these were the hours worked for. The cost of goods sold and inventory data compiled for the year is as follows. Direct material, COGS, work in process, finished goods. What exactly are we looking for? What is the amount of over or under applied overhead? Just the over applied or under applied. This is the rate. This is the level of activity. So the rate multiplied by the level of activity of machine hours means the overhead applied or absorbed or recovered or allocated is 16.25 multiplied by 20,000. That is 325. That is absorbed or recovered. What was actual? Actual was 275. See, you have charged much more than the actual. How much more? 50,000. So your overhead is over applied by 50,000, the difference between the applied and the actual. Remember, applied overhead sometimes also called absorbed or recovered. So make sure you understand and interpret the term correctly. On January 1st, Maples had 2 jobs in process. Job 506 was in process with this much assigned cost. Okay. Job 507 with this much assigned cost. Let us write this down right in front of it. Assigned cost, A cost. For 506, it is 10,500. And for 507 job number is 14,250. Fine. During January, 3 jobs were started, 508, 510 and 509. 508 through 510 were started. 3 jobs, 506, 507 and 508 were completed. The question says materials and labor costs are added during the month of January as follows. This was the labor incurred during Jan. This is the material incurred during Jan. Manufacturing overhead is assigned at the rate of 200% of direct labor. Okay, now this is manufacturing overhead is applied at the rate of 200% of direct labor. What is the January cost of goods manufactured and transferred from work in process? Just stay till here, no more. So manufacturing overhead is applied at the rate of 200% of direct labor. So it's going to be 4,000. 1,500 is 200%, that is 3,000. And 3,600 twice will be 7,200. Now what you have to do, these are the completed jobs. These were the costs added in the previous period. These are the cost for the current period. If you add all these marked numbers, all these, you should get a total of 50,050. That is the total cost of the goods transferred to the next department, and that perfectly matches with your option D. Okay. During May, Mercer Company completed 50,000 units costing $600,000 exclusive of spoilage allocation. No spoilage is included in this amount, neither normal nor abnormal. Of these completed units, 25,000 were sold during the month. An additional 10,000 units costing 80,000 were 50% complete at the month's end. All units are inspected between the completion, this is very important, between the completion of manufacturing and transfer to the finished goods inventory. And at that very point, we determine whether the goods are fine or not. Since these items we started work on are 50% complete, which means they have not yet been inspected, so just reject them, ignore them, do not consider them in our computation. It says normal spoilage for the month was 20,000 and abnormal spoilage was 50,000 was also incurred during the current month. We know what these losses are. Normal spoilage is expected, abnormal is unexpected. How do we treat? We know this 50,000 abnormal spoilage is charged in full as a period loss for the period or period charge for the month of May. What about the normal spoilage? Normal spoilage is included as a part of product. Since we have 50,000 units and this $20,000 is included in these 50,000 units, half of them have been sold and half of them are still unsold, which means if 20,000 is your normal spoilage, it is divided into two components. The one that is still in your closing stock is your asset, is your inventory. The goods that have been sold, 25,000 units were sold, they carried with them this $10,000 of normal spoilage. So the question says the portion of total spoilage that should be charged against revenues is this 50,000 for abnormal spoilage and this $10,000 normal spoilage that was included in the half of the goods we produced during the period. So that makes the total spoilage charge against revenue is $60,000. That makes D to be the correct option.